Hey everyone, and welcome back to our channel, the go-to place for all things finance. Jayden here, and today I want to go through the nitty-gritty of mortgages. From understanding the interest rates you're eligible for, to figuring out how to leverage government grants, we've got it all. Whether you're a first home buyer, upgrading, or just looking to explore options, we've got you covered, so let's dive right in. First question, what interest rate am I eligible for and what's the maximum amount I can borrow? In Australia, the main things that's going to affect your interest rate isn't your credit history. It's not like in America where they credit score and they give different people different types of interest rates. It has to do with the type of loan you're getting, if it's a home you're living in or an investment, and the deposit. The more deposit that you have, the lower the interest rate's going to be. The reason is the banks find you lower risk because if you have a 20% deposit, it means the bank's risk lower. They're only having to give you an 80% loan. It's a lot lower than if you've first home buyer, which is pretty common. You might only have a 5% deposit. So then the bank's giving you a 95% loan. It's riskier for them. So the interest rate tends to be higher. They call this pricing for risk. And this is where it can get pretty deceptive online. You might look at a website, CommBank's a good example. They'll be advertising a shiny rate for a 70% loan. Or if you've got a 30% deposit, it doesn't really apply if you're a first home buyer and have less than a 20% deposit. Now, different banks do have different risk appetites. Some banks don't price as heavily for risk. They don't really mind as much if you have a lower deposit, and it can depend on government schemes. So for example, if you're using the first home guarantee scheme, the banks consider this like you've got a 20% deposit. Even though you might be putting 5% down, they consider you lower risk and you get better interest rates. This is where a mortgage broker can help out. Question number 2, what government grants are available? Can I qualify for any of them? The government is overhauling the home guarantee scheme from the 1st of July. They're opening up to a bunch more people, including permanent residents, so you don't only have to be an Australian citizen. And if you've owned a property before, if you haven't owned a property for 10 years, you're potentially eligible. But the biggest one really is the home guarantee scheme. This is where the government acts as your guarantor. You potentially only need a 5% deposit, and you don't pay any lender's mortgage insurance. Now, the limitation with this scheme is you have to be living in the property. So it's not available for investment properties. It can be hard if you're trying to do some rent vesting type style arrangements. And there's only a limited amount of banks that offer the scheme. Not all banks offer it. So for example, ING can't do it. Suncorp at the moment don't either offer it. And there is some restrictions. There's different caps depending on the postcode. I'll include some links below to different tools to check out what you can be eligible for. And there are income caps. So the scheme is based on the financial year. So keep in mind, from the 1st of July, you're going to have done your tax return for the year ending 30 June 2023. If your income's going to be higher next year, you might need to look at getting something done now before June 30 because you could miss out. As a single person, you need to be earning under $125,000. As a couple, your combined income needs to be under $200,000. There's some limitations on purchase prices as well. In Sydney, for example, you can only buy for up to $900,000. For some people, it just doesn't work for what you're looking at the budget. Definitely check out some of the tools. And if you have any questions or you're looking to apply for the scheme, we have helped heaps of people over the last couple of years with this scheme. There are some things to be careful of, especially with the forms and how the banks want things presented. So hit us up, huntergalloway.com.au. We'd love to help you out with securing your low deposit home loan. Question 3, what refinance or first home buyer cashbacks can I get? So a cashback is an incentive that the banks will give you upfront to jag you as a customer. We see this more commonly if you're refinancing, not necessarily if you're buying a home, but if you've had your home for 1, 2, 3, 4, 5 years, you're going from, I don't know, say Commonwealth Bank to UBank. Sometimes banks will offer you a bit of an incentive, a cashback to help switch banks, because generally it costs about $1,000 to move banks in Australia. These cashbacks can range from 2 to 4 to actually 5,000, depending on the loan amounts. Generally, if it's a higher loan amount, it's over $1 million. So that's if you have an existing home loan, you've got equity, you're looking at switching banks, they give that cashback to incentivize and switch lenders. If you're a first home buyer, there's a handful of banks that will give like $1,000, $2,000 to help covering with the solicitor or conveyancing fees. Keep in mind that these banks don't offer the home guarantee scheme. You'd have to pay lender's mortgage insurance. It might not make sense, but if you go 20% deposit, it could. Again, your broker can factor these in, see what's going to work for you in your situation to make sure you're getting the right deal and the right combination of loan structure, cashbacks, incentives, etc., personalized to your circumstances. Question 4, do I have equity in my home? Equity is a concept that confuses people a lot, so let's break it down. There's 2 ways equity works. If you sell the property or if you've got an existing loan. In this example, if you've got a home worth $500,000, an existing loan of $350,000, if you sell the home for $500,000, you clear this loan of $350,000, you walk away with the equity of $500 minus $350 equals $150,000. You've sold the property, you've cleared the loan, that $150,000 is yours minus agent fees, etc. But if you're using equity to get a loan, get a top up for investment property, the bank will lend against that $500,000 at 80%. So they'll give you a $400,000 loan. 400 minus your existing loan of $350 is $50,000. You therefore have $50,000 in equity to use towards an investment and everything else. We have a calculator on our website to check out equity and how it works. It can confuse people because there's different ways and they say, what's my equity? How can I use it? Keep in mind as well, that $50,000 equity loan is borrowed. So the bank's not going to just give you $50,000 without a loan. That's actually a loan, so you need to be able to afford to make repayments on that, and it's also subject to borrowing capacity. We have a whole other video on using equity and buying a second property, upgrading, so check that out in the comments below. Question 5, I've recently been employed. I've started a new job. Do I need 3 months in my job to be eligible? This used to be the case. A lot of the banks have taken away from this, not all though, and it also depends on the type of job. Let's start with the most common. If you're permanent full-time or permanent part-time employed, you need one pay slip and you're good to go. No questions asked if you've started a new job, even if you change industries for that matter. If you're casual, this is where it gets a little bit trickier. Most banks prefer you to have held a job. If you're casual, if you're not getting annual leave, you're not getting sick leave, they want you to have a casual job for 6 months. There are some exceptions. If you've been in the same industry for over a year, and if there's less than, say, a 30-day gap between your previous casual job and the new one, some banks can consider less than 6 months in this new casual role. It also depends if you're like a permanent full-time casual. We can sometimes get a letter, and there's a couple of ways around that. If you're full or part-time permanently employed, one payslip's all you need. So if you're changing jobs, it's not going to derail your home buying journey. Question 6, should I consolidate my personal loan, car loan, credit card, etc. into my home loan? Generally, a home loan is going to be a longer term than a personal car loan. The car loan you might get for 5 or 7 years, and after 7 years, you've paid it off, it's gone. A home loan, because it's much bigger, you'll have over 30 years. So it takes much longer to pay off. Therefore, you can pay much more interest because you're taking that car loan that you would have paid off over 7 years and extending it up to 30 years. It's going to take longer and cost you more in interest. For a lot of people, it doesn't always make sense to consolidate car loans, personal loans into your home loan, but there are some exceptions to this. If you're looking at buying investment property, your car loan and personal loan could be limiting your borrowing capacity. You may need to consider it's going to cost me more, but it's going to allow me to achieve my goals of buying investment property. Or if you use that personal loan potentially for, say, home renovations, and it was all for that purpose, or if it's an investment property, use that personal loan to improve the property before you rented it out, you can potentially consolidate into home loan, and it could make sense. This is where the advice probably needs to get a bit more personalized and tailored to your situation. So if you are in a situation where you're thinking about consolidating your car loan or credit card, personal loans, etc., have a chat to a broker, hit us up. We can go through your situation, see what's going to make sense from an income and from a repayment perspective, and even a cost over the long term. Question 7, can I buy a property with my partner who's on a temporary visa? There are some banks, yes, that will allow this. If your partner is on a temporary visa, so you're not a permanent resident, you're not an Australian citizen, it is possible to do this. Some banks will consider it as long as you're buying with an Australian citizen or permanent resident, both of you on the loan, they'll allow you to use both your income towards the loan repayments. Now you need to get some solicitor and legal advice around this because there can be some implications. If you're a non-resident, putting your name on the title, you may need foreign investment review. In some states like Queensland, some additional stamp duty that you're going to have to pay in that situation. If you are in that situation, if you're on a temporary visa, have a chat to a mortgage broker like us. We can have a look and just make sure you're going to be eligible depending on that type of visa as well. And also have a chat to a solicitor to make sure you're going to be able to buy a property, an existing property, or if you're looking at buying a new one, there's different rules around that as well. Question 8, should I go for fixed or variable rates? This was such an easy question to answer a couple of years ago when the fixed rates were 2% and the variable rates were higher. Obviously, it was a much easier proposition if you were going to stay in the property longer term. Principally, the difference between fixed and variable rates, a fixed rate is set for a certain period, so usually between 1 and 5 years. Your interest rate is set. It does not change for that 1 to 5 year period, and you have some consistency. So it's nice to be able to budget. Yep, my repayment's going to be X amount for the next 5 years. I don't need to worry about it. Variable rates, on the other hand, can change. They can go up, they can go down, depending on the market and also what the Reserve Bank of Australia does. The banks don't always follow the Reserve Bank, so keep that in mind. We have seen them following the Reserve Bank in the current interest rate increasing cycle, but it doesn't always happen like that. And the banks can choose to increase independently of the RBA. If you're wanting to be able to budget and have some consistency, fixed rates can make sense. If you're expecting a big bonus, you want to use an offset account, fixed rates can be limited. You can only make up to $10,000 a year in extra payments with a lot of banks. Variable rates allow unlimited extra payments and the ability to switch lenders if they're being uncompetitive. So again, horses for courses, comes down to your situation, what you're looking at doing in the property, and even what your plans are in the short to medium terms. Have a chat to a broker or your bank to see what's going to make sense with you on the day. Because that's the other thing as well. With fixed rates, they're based on what the market and the banks are forecasting rates to be in the next 1, 2, 3, 5 years. If you watch the stock market, you know that there's constant changing based on the sentiment and what they're expecting the future to hold. So those fixed rates end up changing almost weekly. If you're getting a pre-approval today, it can be hard to work out is fixed or variable right. It's going to come down to pretty much the day when you found a home and bought. Again, have a chat to your broker and see what's going to make sense for you on that day at that time. Question 9, can I apply for a home loan if I've got late repayments on my credit files or defaults? This is tricky. If you've got paid defaults under $500, banks will consider you, as long as there's a fair reason. Like sometimes it could be moved over to the UK for a couple of years. I was living there, I just didn't get the bill, paid as soon as I came back. It was electricity bill, it was a phone bill, under $500. In some cases, under $1,000. They're pretty understanding of those situations, and no, it happens. I can get over it. If it's over $1,000, it does get harder. It could be where you might want to chat to a credit fix company. I've had some clients that had some success actually with contacting credit fix companies. They pretty much contact the business that gave you the default and say, did you follow the proper process? Were all these steps followed? And if they don't, they can sometimes get the default removed. So it's definitely worth checking out. If you've got late repayments, it depends how bad, because your credit file shows your last 2 years of payment history across all your credit cards, car loans, personal loans, any credit basically. You want to make sure everything's all up to date. In a lot of cases, as long as you've had the last 6 months clear, all clean, it's okay. There's some smaller banks that can get a bit funny if there's more than 2 late repayments in the last 2 years. They'll want a bit of a please explain. And also other banks will judge you on your credit score. So if you have a credit score under 600, in some cases the banks will say no, computer says no, we're not going to consider it. Again, your broker is going to help with this. We can get a copy of your read-only credit file. If you don't have it, check out Ilion or Vita online and you'll be able to get a copy of yours and see if your score's over 600. You don't need a credit history in Australia, so it's one thing we do ask sometimes as well. Should I go out and get a credit card to build up my credit history? It doesn't matter. The banks mostly care about negative credit history. If you've got late repayments, defaults, missed repayments, they're not going to like that. But if you're a young person, just got out of uni, started your first job, haven't had a credit card before, you're going to get the default credit score of around 600 or 700. So it's going to be okay. And last question, is now the right time to buy? Everyone's situation is going to be different. No one knows what the market's going to do. If you look at property over the last 20 years, it's performed pretty well, but who knows what's going to happen in the future? You really need to look at your own situation, your own circumstances, and work out, well, what's it going to cost me to rent? Am I happy to potentially move in 12 months or have the rent increase in 12 months, depending on the situation? Am I in a stable job? Do I have a deposit? Am I looking for a house to live in for the next 5, 10 years? It can make sense. Or if your strategy is buy it, turn it into investment, that's okay too. You just need to work out what's going to be right for you, because not everyone's situation is the same and you need someone on your side. That's where Hunter Galloway, we're mortgage brokers, we can help out with your home buying process and do those numbers to see what's going to work for you. So before we wrap up, let's quickly recap what we've discussed. We've delved into interest rates and borrowing limits and how that's determined. Remember, we've got calculators on our website to help with that. Or if you need any assistance, hit us up at huntergalloway.com.au. We briefly discussed the government grants and what's on offer there. We've got more videos on that, so check out the description below. We've looked at cashback options, so mostly for refinance. There's a few incentives for first home buyers there. Speak with your broker about what's available. We went through equity. Obviously, it gets confusing. Equity doesn't really matter if you're a first home buyer. It's only going to matter when you're getting to your second and third property and you're wanting to leverage your existing property. So don't worry about it too much if it doesn't necessarily make sense until you're at the point of buying your second home. We went through employment changes. This is a big question at the moment, so it's okay if you're changing your jobs. Mostly it's going to be easier if you're permanent full-time or permanent part-time. If you're casual, there's a couple of ways around. Have a chat to us if you are thinking about changing or if you're uncertain about your contract employment, as there are some different ways that the banks will assess you. We went through consolidating your personal loan and car loans. Again, it's case by case. It's a tricky one. You need to determine if you're more worried about the costs or the cash flow, and that will help you make a decision. We looked at fixed rates and some of the opportunities if you have a bit of a checkered past in your credit file. At Hunter Galloway Mortgage Brokers, we help home buyers, refinances, investors all across Australia. There's no fees or no cost for our services. If you've got any question, leave a comment below. We'd love to answer it. If you need any help with financing or you just want to know where you're at and what you potentially can do, even if you're not planning on buying now, hit us up at huntergalloway.com.au. We can complete a free assessment, work out what your borrowing capacity is. We can see how much deposit you need and even give you some goals. If you're looking at buying in the short to medium term, we can let you know what those numbers look like. We'd love to help out. And until next time, see you guys.